Hi everyone, just give me 1 second. I want to make sure I'm live everywhere. Yep, it looks like I am. I hope that everyone has had an amazing week. It's Wednesday, it's hump day. We're on to the end of the week. We're almost there, everyone. So today, we're going to talk about understanding and managing your fixed assets. My name is Katie Belsford. I am the president and CEO of KB Accounting. I have my MBA with a concentration in accounting, and I have worked in corporate accounting, whether it be nonprofit or regular or for-profit, for 14 years now, 14 plus years. I don't know if I like saying that. And I'm very thrilled to have you all here, whether you're watching live or whether you're watching on replay. I'm excited to share the information. So, fixed assets. What are those? That is such an accounting word. So basically when you buy certain things or repair certain things, it goes on your balance sheet rather than your profit and loss. And what that does is it allows you to spread the cost of that over multiple years. Now, for-profit and non-for-profit are different in some ways on this. So I'm going to talk about both as we go through the different sections. So fixed assets like equipment, property, and vehicles are a cornerstone of your business operations and financial health. Today, we're going to explore how to effectively manage these assets to maximize their value and avoid common pitfalls. So, if you're here and you have any questions during the live, please ask them as they come up. And I will look periodically at the different streaming platforms because I use a third party to actually stream the video to the YouTube and Facebook. And if you're watching this on replay, type in your question at any point. One of my team will get it, and we will do our best to help you. And that includes tracking assets, depreciation, leveraging your data. We're here to help you. So let's get started. What are fixed assets? First, let's define what fixed assets are. These are long-term tangible resources like equipment, which would be machinery. I hate to use computers because I feel like they're catching up to the price of being able to expense them. Their lifespan isn't as long as it used to be. If you are in, it could be tools. If your tools are expensive enough, like if you're in HVAC and you're buying some pretty big expensive tools, and I'm sorry, there was a beep outside. That's why I looked out. Those would be assets instead of expenses. Property, like your office buildings that you own, warehouses that you own, things like that. Not places you rent, but you have to own them. And then there's vehicles. So if you have delivery trucks, company cars, any of that, those are fixed assets. So why are these so crucial? Fixed assets represent a significant investment, and they play a key role in your business's stability and growth. Managing them effectively ensures you're getting the most out of these investments. Now, I hate to go into too much boring nitty-gritty detail, but this isn't just about a way to spread your assets over time with depreciation, the cost of them. Your assets also help with some key ratios that you have to give banks if you're going for loans or what have you, in funding of any source. A lot of times they want to see like your debt to income, which is not to do with assets, but your equity. I'm drawing a blank on the rest of them, so you have to forgive me. It's a busy week here because 1099s are done, so my brain's like in that world, so forgive me if I'm blanking on some of the finer details. If you ask questions, I will feel free to answer them for you. So there's more important reasons other than spreading out the cost of your assets to have them on your balance sheet versus your profit and loss. So how do you track them? Tracking your fixed assets is essential, and here's why. There's asset registers, which are detailed record of your assets, including the purchase dates, the costs, the locations. It helps you maintain oversight and plan for maintenance and upgrades. There's digital tools that you can use, like software that'll automate that tracking and ensure accuracy. You could use Excel, Google Sheets, but there's also actual software programs that you could be using. It depends upon what your company looks like. Like my company doesn't have a lot of fixed assets because we run our office space. We are accountants, so we work on computers. Everything's cloud-based. We don't have servers. So it depends upon your company how much you want to spend in doing that. I keep mine in a Google Sheet because I have like 5. Other companies that I work with that have many, many more, I would suggest that they invest in the software. Because if they invest in the software that tracks them, it can not only track your depreciation so that you make sure you're not depreciating too much or too little each year, but it also makes it easier to clear them out as they are no longer in service. The better you track your assets, the easier it is to manage them. So now let's talk about depreciation, right? This is the expense side of it all. So fixed assets lose value over time, and understanding depreciation is key for accurate financial reporting and planning. A lot of people, when they think about their companies, they're thinking about the cash basis of their company. This screws a lot of people up because depreciation isn't cash, because you expended that cash when you bought the asset. So you're going to have to try and flip a switch in your mind. So depreciation schedules outline how and when an asset's value decreases. Common methods include straight line and declining balance. Declining balance is a lot more detailed, and that would be something I would tell you to have your CPA handle or your bookkeeper, rather than trying to figure that one out yourself. Straight line's very easy. So you buy a computer. Computer's useful life is 3 years. So you take the $2,000 you spent on a computer, you divide it by 24, and that's how much you record each month as depreciation. Super, super easy. Your last month's going to be a little bit off. It's not going to be exact as the others because rounding. Many businesses overlook the depreciation side of it, and that leads to inaccurate financial statements or missed tax deductions. So you need to stay proactive, consult your accountant, your bookkeeper, whatever, if needed. Now, finally, let's discuss how to use fixed asset data to enhance your financial strategy. Asset data helps you decide when to repair, upgrade, replace equipment, avoid costly downtime. As I alluded to earlier, you also like your liquidity ratios, your ratios. This is where I was going back to. Your ratios are also a way to leverage your fixed assets. So you have your liquidity ratios, your solvency ratios, your your current ratio wouldn't be affected by your assets because they're more long-term your fixed assets are more long-term. Your current ratio deals more with your cash and your investments and things like that. I'm trying to think of whatever. Your debt to asset ratio may be affected by long terms. I can't think of the actual equation right now, but those are all helpful to investors and bankers and things like that. So a lot of times when you get a loan or a bond or some other form of money from the bank, they want your ratios to be in a certain range. And if you're not utilizing your fixed assets the way you should, that's not going to help. So you also need to regularly evaluate your assets to make sure that they're delivering the expected return. If not, you may need to consider reallocation or upgrades to the system. Might be time to get something new. It depends upon how old your equipment is. But by leveraging your fixed assets strategically, you can optimize costs and improve operational efficiency. And I don't think fixed assets get enough attention as they should, because they can really, it helps give you a strong balance sheet. So now it's your turn. If you have any questions, I'm going to look at the social media platforms right now, and it doesn't look like anybody has reached out with any questions at this point, but I want you to feel free to ask questions as needed. As you're watching this on replay, we are here to help. If you do not have a team to help you with this, reach out. We'll see how we can help. But just remember, whether you're new to the concept or looking to refine your approach, it is always important to revisit your fixed assets. So I want to thank you all so much for joining today's session and on understanding and managing your fixed assets. I hope you've gotten some insightful information from it and you are leaving with some actionable steps for your business. If you missed any part of the live stream, don't worry. The replay will be available soon. And you can sign up for our newsletter, because we send out this information on our newsletter. I think it's on Sundays. And if you want any more tips or updates, again, subscribe to our newsletter. Follow any of our social media channels. We are on Instagram, LinkedIn, Facebook, YouTube, TikTok, although we haven't been as active on TikTok since they're trying to figure out what they're going to do with it here in the United States. Our newsletter, you get early access to the replays and you get some exclusive content to help you stay ahead of everything. And as always, if you know somebody who could use this information, please tag them in the comments or share this video with them. And I hope everyone has an amazing rest of their week and beginning of next week. I'll see you all next time, and